Welcome to Talk Tickers. Today, we're breaking down Airbnb's latest earnings call. Now, this one was interesting, a real head-scratcher at first. The numbers looked kind of mixed, but the stock popped anyway. So we're going to get into exactly why that happened. So here's the central puzzle of this whole report. You've got a miss on the bottom line, on earnings per share, but almost instantly, the stock gets a solid 5% boost after hours. It's a clear vote of confidence from the street. So the big question is, what did they see? All right, first things first, let's look at the headline numbers, because they really do paint a pretty conflicting picture. Okay, so on earnings per share, the company reported $2.21, and this is GAAP EPS, right? You know, the official by-the-book number. Well, on that metric, they actually missed what analysts were looking for by about 10 cents. No two ways about it, that's a miss. But, and this is a big but, here's where the story really starts to get interesting. The top line, revenue, came in at a whopping $4.10 billion. That wasn't just a beat, it was a solid beat, and it shows almost 10% growth compared to last year. So this table really lays out that whole mixed picture we were talking about. You've got the EPS miss right next to the revenue beat. But look closer. The really crucial part here, the thing investors absolutely jumped on, was the strength in gross booking value and nights booked. I mean, look at that growth. That's where the real story is. So why all the optimism then? Well, the market looked right past that EPS noise and zoned in on the real growth drivers. Let's talk about what Wall Street really loved. Now, what's so fascinating here is that 14% surge in gross booking value, or GBV. That's the total dollar amount of all the stays booked on the platform, and it's basically the fuel for future revenue. The fact that it's growing faster than everything else, that it's accelerating, that is a huge signal to investors. And look, this growth didn't just happen by accident. It was absolutely fueled by some really smart strategic moves. You've got international expansion just firing on all cylinders. We're talking markets like Japan and Brazil growing at nearly twice the rate of their core business. Then you have features like Reserve Now, Pay Later, which gave a serious jolt to bookings in the US. And it's all happening on your phone, with the app now responsible for over 60% of nights booked. Just incredible execution. Okay, so this quarter was great. But how does it build into the bigger picture? Let's look at management's long-term vision, because this is about more than just one quarter. CEO Brian Chesky laid out this super clear 4-part playbook on the call. And it's not just about their main homes business anymore. He's talking about 1, making the whole service better, 2, taking Airbnb to even more corners of the globe, 3, expanding what they offer, think beyond just a place to stay, and 4, integrating AI across the entire app. And I just love this quote from him. It really sums up their whole approach to AI. He basically said, while everyone else is using AI to glue you to your screen, Airbnb is trying to do the exact opposite. They're using it to enhance real-world experiences, not replace them. That is a powerful story to tell investors. All right, Q3 was strong, but what's the road ahead look like? Let's check out the guidance for Q4. So the guidance they gave really shows a balance of continued momentum, but also smart reinvestment. They're telling us to expect revenue to keep growing, somewhere in that 7 to 10% range, with GVV growth in the low double digits. At the same time, they're actually ticking up their full-year profit margin outlook to about 35%. And that's even while they're plowing around $200 million back into new stuff. Pretty impressive. Okay, so let's put it all together. You've got the strong numbers, the big vision. So here's our take. This is the next call. For any investor looking at this stock, the debate really boils down to a couple of key things. The bulls are saying, hey, this international momentum is real. These new payment features are working, and all the new stuff they're building will pay off big time. The bears, on the other hand, are worried. They're looking at tougher comparisons in North America, potential regulatory headaches, and they're asking if all that new investment will squeeze profits. So where do we land? After digging through everything, we think the growth story here is absolutely intact. The execution is just too strong to ignore. For that reason, our rating is outperform. So here's the trade idea. Our whole thesis is that the market is going to keep rewarding this awesome bookings momentum, even if it means they're spending a bit more in the short term. If they keep executing like this, we see a clear path towards the $130 level after the next earnings report. Now, the pitch. If you look at the options market, there's already a ton of activity around those $125 and $130 levels. So here's an idea. It's a little out there, but plausible. You could look at weekly call options to play for that continued drift higher as the rest of the market catches on to just how strong that GBV growth really is. And of course, we have to close with our usual reminder, this is just our analysis, it is not financial advice. Please always do your own homework before making any investment decisions.